We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. I'm Gabe Johansson here in the studio today with none other than Macro Mike Nuss.
Micro Mike.
Micro Mike?
Yeah, also depends what day we're talking about.
Also known as Michael P. Nuss. Also here with Trevor Howard, known as Trevor GPT, T. Rever. What else? We have some other nicknames.
He's going to be, what are we going to call him when he's big and cut? 10% body fat.
Brad or Chad?
Chad. He kind of looks like a Chad.
That one was for Chad Montgomery. I tease him. Two of my closest friends are Brad and Chad, so
I love Brad Moore.
I got to tease him.
Brad Moore is a great guy.
Isn't he?
Yeah.
So is Chad.
Shout out to Chad and Brad. They're fun golfers.
They are. For old worn out frat guys.
Yeah.
That's what Trevor's gonna. That's what he's going for.
Yeah,
he's going for that look. You kind of look like you're from Jersey Shore. Do you remember that show, or are you too young for Jersey Shore?
No, that was around.
You got the hat on backwards, the necklace. You're getting all jacked. Like you look like you're gonna do the whole gym tan laundry thing.
No. I want to talk about deals. You're getting sidetracked.
Do you do your own laundry, or do you have somebody do it for you?
I've been looking for someone to do my laundry for me, but I do my own laundry.
But you do your own gym. You do your own workouts.
We should definitely talk about deals, not laundry.
Yeah.
All right. What do you guys want to talk about?
So Mike's doing some deal, and Mike went to some conference, and Mike learned how to syndicate, and he had some really long Facebook post about.
All right, so we're gonna have a Mike episode.
I changed my life. I'm Macro Mike today. We're out of the Micro Mike.
You're Macro Mike?
Yeah, we're out of the micro sequence. Micro Mike I alluded to in our goal session.
So you learned more about syndication. You decided you wanted to syndicate essentially, and then you said you were thinking too small or something like that. And now you're
tell us what syndication is in that's different than what you've been doing, because you've had partners, you've had money partners, you guys have raised money in other ways, but you're taking it to a whole new level with like going out to people that aren't really known to you, maybe talking about PPMs and all the legal stuff that goes along with basically raising money from accredited investors.
Yep, gonna hire our first securities attorney.
Are you doing it with Mario, or what's his name?
Mauricio. Well, Bethany was there, but she was so flaky. I still haven't been able to set an appointment with her. So I might actually reach out to Lance Peterson with they're a local guy, one of the bigger syndicators in the nation, Fairway of America or something like that. Cassidy.
We can give you a syndication.
Cassidy's the owner.
Like.
Yeah, I'd appreciate that. I do
Shout
need
out Brian. Don't know his last name.
Brian from New York.
Yeah, so essentially the difference, and that was really helpful to have Bethany there. And step back, I went to a GoBundance event. It's the first GoBundance event I've been to since May of 22, and it was just very good.
What is GoBundance?
It's a high net worth mastermind that I joined back in 2018 when I was 285 pounds. That kind of led to the 40-pound weight loss by January of 2019, and then that really changed my growth curve as a human being.
So you went there to learn how to make money, and you learned how to lose weight?
The idea of GoBundance, correct me if
it's
I'm wrong,
pillar.
Is like there's all these assets to life, and they're like all the people here are good at this money aspect, but want to better the other aspects, like family,
be more well-rounded.
Yeah, and they're all like trying to improve into different areas.
Yeah, like authentic relationships, giving, bucket list adventures, horizontal or passive income. I can't remember what the other ones are. Physical health. So those are the pillars of GoBundance. And when I joined in 2019, we'll talk about Benjamin Hardy. He was at that first event in 2019, but it changed my life. Just being, by far what I felt like was the smallest human being in the room, making you think differently. And so, I went to a multifamily conference. They had their first one last year and second one this year. And it was just good. Like even on the drive to the airport, I started thinking differently, which was very good for me because I've not been in a great space as we've kind of gone through the past summer or so. Not that I've been in a bad space, but I've just been in a struggling space because I've been head down in the forest, not seeing the trees. So the first thing on the syndication side, Bethany LaFlamme was there. She was Mauricio's old partner, so she's a syndication attorney. And essentially on the syndication side, it's just there's JVs where people are active, every member is active, and then there's syndications where you have operators, and you have passive. And that's the clear difference. And so, like, you know, I was pretty unclear with this when I talked about in the past, which is they're both LLCs, right? But they are mutually exclusive based on passivity.
So on a JV joint venture, when everybody's active, you're not bound by securities law because everybody's involved. But
Correct.
when you hop into syndication, you're GP, LP, general partner, limited partner. You're selling a security because the operator is the sponsor who's now in charge of running that deal. The investor is just putting money in and expecting returns. They're expecting returns.
They're investing based on, they're riding your horse.
Yeah.
And so in that scenario, you either need to register it as a security or then you find an exemption. And so I believe that's what everyone does.
So like in a JV, you could get sued like any partnership, but in a syndication, like you could go to jail. Like this is a little...
No, that's the beautiful thing about a syndication. There is a lot of protections from what I understood.
If you do it right.
If you do it right, because it's all about the PPM, the private placement memorandum, and all the disclosures that you have to get. So in a JV, you don't have to do a PPM, a private placement memorandum.
What I'm getting at is if somebody goes out and they say, I'm going to raise money for mom, and mom's not going to do anything, and I'm going to go buy the deal, it's technically selling a security.
Correct.
And you're bound by securities law, and if you didn't go to a securities attorney to set up that partnership, you could very well be violating major laws that could get you in serious trouble.
So even when you write notes, like promissory notes, that sometimes like you can...
Yeah, we got into that, and that was eye-opening. So her thing was if it's longer than 9 months, that is a security, a private note.
Really?
Yeah. So her thing is less than 9 months, attached, securitized by the property, and then that is a loan. But that was kind of the guidance she gave.
So it's over 9 months.
Wait, so if it's attached or not attached, what was the difference there?
Well, she wants it attached, needs to be securitized by property, and then less than 9 months long. And once you go long...
But if it's longer, it becomes a security. And if it's unattached or attached, or does that not affect it?
Well, unattached. You definitely want it attached, right? So there's...
When is it a security is what I'm asking. If it's unattached and longer than 9 months?
You have evidence. You have a case. You want things that line up that say you've done things right. And
is that if you're selling the note or if you're the borrower?
If you're the borrower.
Giving a note.
Giving a note.
Yeah, so this is why, like, when I lent money and got it taken and whatnot, they committed securities fraud when I was looking at it, because now I just have this note that they took money and then signed and then
didn't pay. So it's like stealing.
Yeah, it's just theft.
And so the fraud thing, so if you go down the process and hire an attorney, do a PPM, do all the disclosures, now it's really hard to prove fraud.
What's a PPM?
Private placement memorandum.
And what that just spells out how they operate. It's kind of like what would be an operating agreement or a JV agreement.
Yeah.
Of engagement.
Yeah, so like our JV LLCs are like, 20 pages or whatnot. Like
PPM is long.
100 pages. Yeah. And that's where you have to have all your projections, all your financials. You have to disclose any fees that you're taking or any money that you're earning by this transaction, whether it's through the asset management, the property management. If you're hiring your own company, you have to disclose all of these things. And so then that's how you get your exemption from being a security. And then that's what protects you as an operator is you're above board.
Oh, so you're not selling the security.
That's how I understand it, is you're getting an exemption. Yeah.
Okay. Well, I think that once you hit a certain level, you got to do reporting, and there are certain I think Logan talks about this a little bit, and I don't fully grasp it, but you're still bound by securities law, but you get some sort of an exemption to where you don't have to do reporting like Wall Street does reporting.
Yeah. Well, think of it this way. If you sell a security, you have to be a registered security seller.
Yes.
You have to have a Series 7 test.
Exactly.
So this is a way to avoid all that.
So it's a Series 7 exemption.
Correct.
That's your exemption.
But I don't know the real fine details.
But it's also like if you're selling a security where you're the operator of the deal, then you don't need to be licensed versus if you're selling like third party, like you're brokering a security.
I don't think it's a security. I think my take, and I don't know. I think you're getting an exemption through the setup of the operating agreement and the PPM.
I still think you're selling a security, though. You're just not bound similarly to the same way Wall Street would.
Yeah, you're exempt because you went through the process to get an exemption.
And this is why you get a securities attorney.
Exactly.
Because they will just tell you.
Right. They'll do it all for you.
And it takes a lot of risk off your plate.
Yep.
And for reference, like if people want to do this, like listening, it costs like 20 to 30 grand to do that.
Yeah, there's flat fee companies out there. I think
you could probably do it for less if you wanted to. But usually I find when you pay less for things,
You get less?
You get less.
Where'd you learn that?
Gabe kept telling me that, and then it kept happening.
I mean, that's better than just going and stealing someone else's ppm. Like I know people who have done that.
Yeah, that's happened.
Yeah.
Close to home.
Oh yeah, definitely.
We stole it from ourselves.
Yeah. And then there's different. So you're doing essentially a 506c offering or a 506b offering. So maybe it is a security. Maybe it's not an exemption. I don't know. But a 506b is you cannot advertise. You can use non-accredited investors, up to 35 of them. A 506c is they have to be accredited investors. You can advertise, but you do have to go through the process to confirm that they are accredited investors.
What's an accredited investor?
They earn $200,000 or more for the past 2 consecutive years, or they have $1 million in net worth minus their personal residence.
And now they've changed the rules a little bit.
They're talking about it,
where you can take a test if you're in the industry.
Yep.
You're a broker, appraiser, lender, somebody that's around real estate. You may not hit those metrics, but you pass a quiz, and they say you're qualified.
I mean, yeah, it could, because those. The amounts and the net worth, those were put in place a long time ago. Inflation has changed everything. So think of it this way. You could be a complete fucking idiot and have $1 million in net worth because you bought a couple good real estate deals, but have no fucking clue what you're doing. It has to be outside
of your personal residence, though. So it would have to be investment real estate. But
yeah, but we've seen a lot of people that are losing their ass that have no clue what they're doing, that they just went and raised capital. Sure. Yeah. From accredited investors. And so I think the reason they're adding the test is because they do want to increase those parameters. And the talk has been like $2 million of net worth, $500,000 of income, but it's harder for people to qualify for that, but they can still be very educated. And so that's where the test to prove you're accredited or...
Yeah, it's kind of rigged because like now you're keeping people from getting better returns, but you're also protecting people who don't know what they're doing. So it's like a double...
Yeah, this comes down to protecting the general public. And you were talking about, I think you said 506B.
Yeah.
Is that like the Grant Cardone style where they crowdfund and people can put as little as like $1,000 in and not be accredited? You said
no. So that's crowdfund. There's a whole different thing.
Crowdfunding's a whole different thing. Okay.
Similar, but you can crowdfund and then you can take it from non-accredited.
But all these rules are put in place to protect the investor from you.
Yeah.
That's what it's all about.
And they're also, and that's part of the litmus test, is to make sure that the people that are playing in this investment are big boys, for lack of a better word, so that like when the lawsuits happen or people lose money, that it's just pretty much cut and dry. It's like you knew what you were doing, you went into it, it didn't work, and that's what happens on some investments. So that everybody does, the sponsor just doesn't get sued on every deal that goes sideways.
Yeah.
So you go to this conference and you start learning. It's just an education thing. You learn about how all this stuff works, basically.
Yeah, and networking.
And then why? And then it made you went there with the intent you wanted to start syndicating, or you went to this to learn, and then you came away from it.
Syndicating has been on my radar since 2019, and so we actually went to the Real Estate Guys Syndication Conference in Dallas in 2019, and we actually bought my old business partner a membership into their mentoring program. So it's always been on the radar. We just never went down that road.
Why?
Let's not get into that.
Dude, syndication kind of blows, though.
Well, I mean, syndication has its place, and there are some people that's all they do. It is a tool.
Dude, I used your quote at least 5 times this past week.
Which one?
Syndication makes a good deal great. Syndication makes a great deal good.
That's Logan's quote, but I'll steal it.
Well, it's yours. For me, it's yours.
Yeah, there are deals that are better because they become syndicated. There's also deals you're just not going to be able to do without syndicating.
And to this point, our markets are based off of that. Like our real estate, commercial world, commercial construction, commercial development is based on that. So think of it this way: if you want to go do a huge project, you're going to be taking on a loan that can wipe you out. So a lot of times what you're doing is getting a non-recourse loan. You're pooling other people's money to be the equity in that loan. You're taking a fee to create all that, and then you're the asset manager and the operator, and the goal is then to implement this business plan.
So you take on a lot less risk. You get paid to do the work.
Yep.
And in the end, you may get a payout, but it's not going to be nearly as big as if you'd done it on your own. You're going to get a piece of the payout.
Yeah, but you're also doing something you couldn't do on your own.
You're a manager rather than an owner, really.
And you can own a piece of it, but it's just way cooler to own 100% of the deal than 30 to 50.
Why?
Why is it cooler to own more real estate than less?
Yeah. No, I mean, not more real estate, but more of each deal. I think there's a mental block there. Like, you don't have to own the whole deal. I think I would rather own 1% of 1,000 deals than 100%.
Yeah, it just depends what you're trying to do.
Deal. Yeah,
like, what do you want? What are you trying to do?
People think it's really cool, but like it gets whittled down so quickly when you start thinking about it. If you have a $10 million deal and your GP owns 30%, and you have multiple players in your GP, and now it's like, oh, I could have just bought a house or a fourplex and owned the same amount of real estate and not had to go through all this headache of putting all. But
I believe that there's
other reasons.
There's economies of scale. Like, you make so much more money on a 100-unit complex than you do on a fourplex. I would rather own 4% of a 100-unit complex than own a fourplex.
Sure.
Yeah. So if you look at it this way, so we put a 46-unit apartment building in escrow. If you look at what my share of that GP would be, it would be more than owning an 8-unit building, right? And so I can go try and use my own resources to own an 8-unit building, which I could do, but I don't have the resources to own a 46-unit building. And kind of the difference is now I, as an owner, as an operator, I have that's kind of my share of all that, but I am the operator. We're going to take me and my team are the operator. We're going to take a fee to do it. The value add here is the management fees are stupid. It's like a 57% expense ratio, and most of that is management. So we can strip out like 10% of cost just from better management. Yeah. And my company will be the manager. So now we have management fees. We grow it's the economies of scale. And that's why Benjamin Hardy was there, the author, because he just released his last book, The Science of Scaling. So that's the thought process here is you're scaling. Willpower doesn't work. Personality isn't permanent. 10x is better than 2x.
What's his whole thing? I don't know much about him. Like, who is?
Yeah, he's a psychiatrist. He's
just getting you to think bigger.
That's his whole thing. His framework, and we can talk about his framework because there is actually an argument. So a lot of people, he's one of my favorite authors. I've gone further away from him. I've liked less and less of his stuff because he's really focused on scaling. And like the framework of his new book is, what can you be the best in the world at? And that is the mental framework of how you then change your life. That's not me. I have no desire to be the best in the world at anything. And so there's a disconnect there. But that's what syndication is it's a way to scale.
Yeah, it's cool. I just think people get overhyped on it and then don't it sounds really cool to do, and there's a good place to do it, and we do it because it makes
there's a time and place.
What's cool is you can now say you have 10,000 units under management. Yeah. You've got billions of dollars of assets. You're taking fees. I mean, really, a lot of syndicators, I think, are just in it for the fees. It's a now money play.
Yeah, a lot of them own very little of the deal. Yeah, we use it as a tool to own real estate.
Exactly. They're looking more for act fees, dispo fees, refi fees.
Here's a good everyone has their own different reasons. I just want to do it because, again, what am I trying to do? Build my balance sheet, build my reputation, get more, change my lending parameters. For me, it ticks a lot of boxes.
You said this is 48 doors?
Yeah, tell us about the
46.
Could you do 46? You could do the deal with just a few partners, or do you have to syndicate it in order to...
Yeah, we'll talk about that. Okay. So here's an example of why you would syndicate or why you wouldn't syndicate. So in this scenario, it's just an older dude that just is ready to take a low price on cash. Like, it's $140,000 a unit, $120 a square foot. Nice big townhouse style units, condo conversion. There's 18 buildings, so 17 duplexes. They have garages, they have carports, there's a swimming pool, there's on-site maintenance.
When you say condo, they've already done the condo?
No, they're built to a higher level of quality. Okay. And then there's one building that is a 12-unit building. All the other 17 buildings, they have in-unit washer and dryers. They're 2 stories. They're nice, well-lived buildings.
What's it rent for on average right now?
Like $1,550, and our price per unit is $140 a unit.
Are those rents low?
That's the best part.
I don't know what market.
So they range from like $1,400 to $1,800. Market's probably a little bit more than the most recent lease ups are at $1,800, and they leased up in 4 days.
For 3-bed?
2-bed.
Oh, 2-bed townhouse. Okay.
Yeah, 2-bed, 2.5 bath, and 2-bed, 1.5 bath. Caleb Webster. So we've been talking with brokers and making offers, and he was following up on a deal that we actually lost out to one of our other syndicator friends. And it's so funny how the world works. So Caleb calls me. He's like, "Hey, you remember this property?" Yeah, our friends got it in escrow, and then but he followed up with that broker, and the broker said, "Yeah, we're in escrow, but we just got another listing agreement with this other guy, which we've been trying to sell. He doesn't want to take it to market. He wants it off market. Would you be interested in that?" And then that started that discussion. And it's funny, that same exact day I got a phone call from our syndicator friend on the other property. Like, this is how the world vibrates, right? So the timing of it all was Caleb said, hey, why don't you take a look at this? He sent over the offering memorandum, didn't look great. Sent over the T12, which looked amazing because it was better than the offering memorandum.
That's rare.
Very rare. And I think it was because we still need to dig into all these numbers. I think it was just old information from when they were trying to sell it at $8 million, $8.5 million. And through, like, they put $75,000 in CapEx in 1 month
and you're
this year.
For 6?
6.4. Yeah. And when they came to us, it was, hey, all the roofs need to be done. We went out there, half the roofs were done already. So all the envelopes look great. The windows have been replaced. It was built in 72.
A good deal gets better and better.
Yeah, exactly. So Caleb and I, we had a conversation with the guy of like, hey, yeah, we're interested. We set an appointment. We walked 3 units. Just loved the property because it was in better condition than we thought. The envelopes look really good. Like, you drive up, and it's East County. It's not the best part of Portland.
It's a place you can manage.
Yeah. It's got on-site manage. It would be different for us.
I thought you just told me you didn't want to manage on the east side anymore in our last episode. Not that far east.
I don't want to deal with C-class tenants and the headaches of C-class tenants. And this is in a East County, so it's more of that type of location, but the building attracts different types of tenants.
Okay.
That was my take.
Building.
I felt really good when I pulled up into it. My first, because it's on the edge of industrial. Mm-hmm. So it's not like in Rockwood where there's heavy crime, a lot of homelessness. It's more dense. We're on the edge up closer to I-84. We're right on the edge of the industrial area. And it's a 3-acre property with one little driveway entrance. And so very well maintained property. The grounds look really good. The pavement looks really good. You can tell that they've done a lot of stormwater and sewer work because pavement's, patching. Mm-hmm. They put a lot of money into the asset. It's not like a slumlord who's kept rents really, really low and not maintained the building. He's owned it for like 30 years. He's maintained the building. Some of the rents are low, so there's rent upside on some of the units. And then the recent ones show that there's upside on almost anything that hasn't been leased up in the past year. The property manager is charging a ridiculous amount of money. They put a new site manager. I met him. He's been there for 2 months, and he's just whipped it into shape. He's like, the number one complaint is people parking in the wrong spot. There were 3 tow trucks that came through while we were there. Wow. Yeah. So you have a new on-site manager who loves the building, loves the tenants, has done a great job leasing it up.
Is it underparked?
Yeah, it's like 1.3 ratio.
Yeah. Is there street parking?
Yeah, but you're on a 4-lane industrial
3
road.
acres. Can you add parking?
No. No.
42
it's really
units on 3 acres is...
It's 46 units.
Sure,
it's cul-de-sacs. You got a lot of road. You got a lot of common area. I think you got one road that meanders up into the complex, and I think there's like 6 or 6 cul-de-sacs.
They can park on that road on the end?
No, they can park on the addressed road, which is a thoroughfare.
Okay.
No one wants to park there.
So why'd they drop price from 8 million to 6.4?
It's just a seller that wants to retire. He wants his cash. He wants to sit by the pool in Scottsdale and ride off into the sunset.
And they didn't take it to market again.
Yeah. And so here's the difference of, right, why would you syndicate it? Why would you not syndicate it? So if they were open to a structure where we could come in and bring in new debt and they take second position, you do that deal on yourself all the day because it takes very little resources to do it. He won't let you assume the loan. You have to cash me out, and in order to do that, it's going to take like 1.6 or 1.8 million dollars, which I do not have. And so in that scenario, there's still a lot of value add play. We think we can get all the capital back out of it within the next 5 years, and then it's an infinite return. So it ticks a ton of boxes.
So talk about like plan A, plan
You'll
B.
easily be able to get the capital.
You could take 1 or 2 partners to raise 1.6, 1.8, or you go syndicate and bring in more partners. What are the pros and cons of doing either one? Like, I guess if you couldn't find somebody with 1.8, you'd go out and syndicate.
Yeah.
How much of the deal are you giving away on the syndication?
70. That's what the first.
I think you
PPM
could
was.
rather go find one money partner, and you could go turn that way quicker. Give them half of the deal,
and keep half,
and then just give them all of their money back before you profit.
Maybe, I don't know. It's.
I mean, these things take it to 1,800 average rent.
Do like a pref equity, JV with one money partner.
Yeah, I bet you could do that. And I'm just doing math in my head, so I don't know anything about this property, but I would think you could do that within a 2-year time frame.
Yeah, well, again, this is why you change, right? You go into different rooms to learn different things. That could possibly happen.
The cool part is you have a deal, so now you just you can do it anyway now.
Yeah.
You have the deal, which is the important part.
That's how it all starts. Yep.
Yeah.
Yep. So Caleb and I got our first big deal in escrow.
Are you interested to syndicate for more than just financial gain? Are you interested in doing it just to level yourself up to have that in your toolbox for future deals?
Yeah. Well, so the Facebook post that Trevor's alluding to it was a self-worth statement, right? So I started out, I was like, it's time to syndicate a self-worth statement. A lot of our doubts in this world just come from our own self-worth, a doubt of our own self-worth, right? And so for me, I've been in this really good comfort zone. I'm really happy with the private lenders I have. I'm really happy with the bridge lenders I have. For me to do what I do is really easy because of all the relationships I have, because of my team, because of my track record, and but going into this world is completely new for me. It's hard to change in that arena. But if you look at, well, what are my overall goals? When we really did have goals and we had more of a mission, it was impact driven, right? Like, what's our impact? Affordable housing, right? So and I've talked about this, like I felt like I lost my purpose. Well, why do you lose your purpose? You're just stuck in your fucking comfort zone. So you look at this it's a really nice asset in town. We could condo, we're 140 unit. We could condo convert them, sell them for $200,000 a unit, $50,000 less than what they're worth, right? Now it's an affordable housing play and make $2 million doing it. So it has so much more impact than what I've ever done to this date. And so for me, that ticks a lot of boxes. We need to figure out the property management piece and make sure that it's accurate and that it's adequate. We may want to partner with a different property manager, right? These are things that we figure out as we go down the road. But I look at it as there's upside without displacing tenants. There's upside without CapEx. It ticks a lot of boxes as the first deal for me to get out of my comfort zone, relatively low risk. The team's great. Like Caleb was on and we were talking about how we've been working together and trying to do this. Another portion of that is another lender that Caleb's been working with, who I've met as well. And when I met him, he was already working with Caleb. It was as a casino, a real estate casino night. We had a great time. Like I met one of his brokers and she's, oh, you need to meet this guy. Had a great time that night, and I found out he's working with Caleb. And I was like, just keep working with Caleb. Like, just keep doing what you're doing. And at some point, there will be a big deal that comes around, and we can do it. And what was beautiful when we did that site walk, he shows up at the very end. He drives in. He's like, I like it. I'll put, I want to put a lot of money, like about half of the capital in.
The investor?
Yeah. And the other thing is we already offered him a portion of the GP just to make it easier, right? He has a huge balance sheet. He has a lot of liquidity.
So he'll go on the loan.
He'll go on the loan with us.
Yeah,
so it'll make it very, very simple.
How long do you have to close this?
We've got 30 days of due diligence and 60 days to close after that.
Okay.
Yeah, the seller wants to close this year, and then we want to close this year because the bonus depreciation that you then get out of it. And for me, I've already had I've had some conversation with some of my other investors, and it works really well for them. They're already excited about it. How'd
you find the deal?
Just the phone call. Caleb did. Caleb did just networking with.
Is it
people.
On the market?
No.
Okay,
No.
so it was a pocket.
It's a pocket listing.
Wow.
Yeah.
Wow.
Yeah.
That's interesting.
Yeah.
In today's world,
Yep.
not a lot of pocket listings going down because everybody's listing because there's so many deals available. Yeah.
Huh.
Yeah. Typically a 46 is going to hit the market. I mean, maybe it's like is it like a preview? Like you got
when we were very quick. He said there are other people looking at it. The broker there are other people looking at it, and we were just fast. I mean, we had an offer within 3 days of talking. Okay. We started talking on a Friday. We viewed it on a Tuesday. Had an offer in on Thursday. We got our counter, and then I went to the conference on Sunday. We got our counter on Monday, and we accepted it.
Cool.
So, yeah.
I like the deal.
Yeah, you want to start getting that PPM and everything together.
Yeah.
It takes time.
So you want like your final underwrite. And then
especially your first one. After that, you can rinse and repeat, right. But you want to get your attorneys involved right away. Yeah,
and again, right? So that's why I like this is because I feel like it's very easy to fund. Everyone that I talked to about it at the conference, and there was a guy at Crux, the lending. Crux was there, and he does a lot of loans in Oregon. Yeah. And he's like, this sounds like a great deal. So that made me feel comfortable. And then with our other partner who wants to do a big deal with us, it just makes it, I'm the path of least resistance. That's what I want. But now I show up completely different after this deal to brokers, on CoStar, to lenders.
Well,
There's a lot of value.
anybody's going to want 140 a door at $1,800 rents. I mean, that just you don't even have to. You don't need a spreadsheet for that.
No, the lowest rent's $1,450.
Yeah. I mean, it's a no-brainer, especially if it's not falling apart.
Yeah. Yeah, right. That's what I expected.
You have to buy it.
There's some deck work. There's guys out there doing some deck work. There's a lot of just kind of dry rot on the decks, but the road's good, the siding's good, half the roofs are good, the windows are good.
Did he self-manage? Or
no,
he had a management company.
He was getting raped by his manager.
Oh, you were saying that 56%. A lot of that was management.
The labor's like $8,000 a month. The labor contract.
So they have an
on-site manager and I think an on-site maintenance person
for 46 doors.
Yeah, yeah. There's a swimming pool, so there's that aspect.
Fill it in.
I might
with Jello.
Yeah, it's just, and then they're charging a big fee on top of that.
So the problem you may run into with the 90 days, and we have a lot of the time, is depending on what lender you go with as you syndicate it. Because are you going to go like bank or credit
agency
union? Oh, okay.
Yeah, and
won't close it.
Again, how the world works.
Do you have extensions?
What's that?
Do you have options to extend?
I'm not too worried about that at this point. I'm sure we can talk about it.
Okay.
Yeah, agency is a nightmare for underwriting.
And we can go get bridge debt if we need to get bridge debt.
Yeah, I would try to not do that just because you're just wasting money at that point. But
you could have a backup plan, though.
But your bridge debt, if you look at the deal and you can, because you're going to give $1,400, $140 rent increases to rent bumps. A 2-year bridge may make sense for you too, especially if you can go IO. Agency will give you 6% right now. You could buy it down to 5.5% though, and then you can eliminate risk on a deal like that by because you get max leverage on that too.
When we're out of this meeting, I got to send the T12, the rent roll, my real estate schedule, and the pro forma to an agency lender who I met this past week.
When's your EM go hard?
30 days.
So it's after 30 days you're in. I mean, or you're going to lose your earnest money.
Yeah. So we'll have it all figured out in the next 30 days.
So tell us more about your GoBundance event. Like you sat next to Jay Scott, you sat next to Benjamin. This is a different event? Or is that? Oh, I thought he was at the.
No, he's talking about he first met John Hardy. You're not a good listener today. You've asked.
No, he's right on.
I thought it was
target. It was a GoBundance event.
Right now that you just went to.
Yes.
Yeah, I'm not the good listener today.
Trevor just tried to call me out, and look what happened.
Yeah.
And by the way, I heard Benjamin Hardy, not John Hardy.
Yeah, it's Benjamin Hardy.
He's thinking of
Doctor.
He's thinking of John Harder, which is his hero, who stole millions from people with SunWest.
John Harder is not my hero.
John, if you're listening to this, we'd love to have you on the show. I'd love to hear your story. I want to know his side of that story.
And the reason you have this is it's a really crooked world. It is a really crooked world. And in GoBundance, we've had, I won't disclose it all, but deals gone bad calls.
Sure.
Like a series of deals gone bad calls. And we had a little deals gone bad recap at the event. I heard some really bad stories about some really bad crooks.
That came through GoBundance?
Yeah.
Really?
Yeah.
Is that one we all personally know?
Yeah, dude, and that guy's going on a tear on social media right now. Just full-on victim, takes no responsibility.
Yeah,
and you know
like that. They're all the same.
Oh, dude, just a dick. Just an asshole.
It's never their fault. Everyone else did everything wrong.
Isn't that called narcissism?
Yeah.
Yeah. So for an example of who's in the room, so Elaine and Nick Stoggeberg, they own thousands of units. They're very good, big known, well-known syndicators. Elaine had one of the best quotes of the day, which was, in her presentation was probably the best, was integrity is only a short-term disadvantage. I fucking love that. Because in this world, we see people doing shady shit all the time.
Do the right thing, it'll work out in the end.
Yeah. And you lose that on deals because people are shady.
Yeah.
Andrew Cushman was there, 1,600 units. He was the GoBundance member number 4. He's like the golden child syndicator in GoBundance that everyone knows. There is a guy from Manhattan, works for a huge developer in Manhattan that owns the famous buildings in Manhattan. He runs their multifamily division where they have 6,000 units now and 6,000 units in the pipeline.
Wow.
Yeah.
6,000 in the pipeline.
12,000 in Manhattan. 12,000 units in Manhattan.
That's a big portfolio.
So the people that are there are completely different level of people. You mentioned Jay Scott's there, and I've known Jay. Jay's a friend. He's going to come on the podcast.
Yeah.
Got him recruited.
I can't wait.
And then you have another mix of people that are just like one guy, Nathan. I met him in 2021. Super cool dude. He has a $28 million portfolio that he just owns by himself, and he bought asbestos companies, and he's looking to roll those up to a private equity firm, and so maybe he wants to syndicate. And so you just go meet, and then there's another guy from LA who's done a lot of syndication in the past, but now he just owns his 600 units in LA, but he's thinking about syndicating because LA is at the bottom of the market.
So you said it was a multi-family conference, so Go Abundance does different kinds of conferences?
Yeah.
Or is this a syndication conference?
It was a multi-family conference, but it was focused around syndication.
Okay.
So Go Abundance has like a fall mastermind and a winter mastermind, and then they have these regional masterminds. When I joined, they capped it at 200 people, and then in 2020 they essentially opened it up. They said if abundance is gonna be in our name, we can't keep it captive. Mm. And then they had a lot of growth pains. They had one guy from Tiger 21, is a huge, like 50 million net worth to be in it. They made him the CEO, and it kind of went off track because he was not a genuine human being. When I joined, John Berghoff, who's the Miracle Morning guy, Hal Elrod.
Yeah.
So John Berghoff was Hal Elrod's podcast co-host, best facilitator in the world. That's what he does, is he coaches facilitation. He facilitates for Facebook. He was at the World Economic Forum. Like, he's a world-class facilitator. And that was my first experience in 2019, was going to see how, holy shit, this is how a conference is run. Like, within the first hour, I was crying in front of a dude I never met before in 2019. So it's that type of and then they've expanded, and like now we have a Pacific Northwest crew where we have a phone call every other week, and then there's like a Portland group and a Southern Oregon group, and you meet once a month, and they've really gotten cool. They now have a new CEO, Matt King. Matt King is he's amazing. So one of the founders is David, the Keller Williams guy.
Oh yeah.
I forgot his name, but he's got a huge family office.
Yep.
And Matt King is his second in command, and so Matt King is now the CEO. We brought it back to the core values, kicked out a crap ton of people that were just bad actors, because when you grow and you have this organization, people just join to go get money. So it's just been a really good organization that I've been very connected with, but I've also been disconnected with. And as I got more and more into my comfort zone, and I kind of shrunk more and more into the micro mic aspect, I disconnected more. So it's just good change of pace. And again, the world works how the world's supposed to work. It's no coincidence we got this deal looking at I signed up for the conference in like May. Put the energy into the world. We get the deal. We see it the week before a couple days before I go. We make the offer the day before I leave. We get it accepted while I'm there. So, when you have an opportunity, when you're in that group, it's significantly different. Whereas, oh, this is cool, I want to do this. Right now, you're getting feedback immediately. Mm-hmm. And I've got a commercial broker here that I want to work with who does agency. I met this other really cool agency guy who's like, dude, no pressure, just send everything to me. I'll give you some quotes so you know what you can, like he'll just do some work for free. Doesn't want the loan. He's like, I'll just help you, because that's the mentality of the individuals.
What kind of leverage do you think you'll qualify for?
He should get 75%.
Yeah, that's what
his expense ratio is really high, so that might throw it off. But if you back out all the CapEx and you can justify that and how it operates, you should be able to get 75%. Yeah,
because it'll debt cover.
It should. I'm just guessing in my head, but
that's what
price and
that's the performa Caleb put together was 75%.
Do you have any more questions for him on this? Because I got another question.
I was going to ask you if they covered anything about fundraising.
Oh yeah, absolutely.
Were there any tricks you took away from that?
They covered fundraising more. So they had these breakout meetings, and I didn't go to all of them. There was kind of going back on the syndication side, where the person at the most risk are the LPs, the people putting money into the syndication, right? Because when you do a PPM and you disclose everything, it's really hard to get sued. Like, to prove fraud is really, really hard. So the risk truly goes to the people putting money in. And so one of the guys there, Hans Box, is an amazing human being. He is a syndicator. He's done his own things. He's a sponsor, but he also does funds to funds now. So he raises money in a fund to then place it in a syndication. And so he did a whole nother breakout on here's how you vet syndicators. Here's what you want to look for. Here's all the red flags. Not a lot of tricks on the fundraising side. They didn't really get into that.
What are the red flags?
I didn't go to that because I wanted.
Oh, that was a breakout session.
Yeah, I went to the Andrew Cushman breakout session.
Okay.
I wanted to see how his team operates because I met Andrew in 2019. He's a completely different human being now. His team's significantly different. And what was cool is he had some of his team members there, so you can talk to them. He does what they call second party property management, meaning they have the third property manager do all the accounting, and they're the regional. They call them the regional manager, but they work directly with the site people, and they have weekly calls with all of their site people. So their comment was, and they bonus their site people outside of their property management agreement, the regional. And so one of their things was, if you ask them who they work for, they don't say the property management company, they say us. And so to just see how people structure and what they do and what they're looking for. And Andrew's just a really open guy, and he's like, yeah, all of our properties are doing distributions, everything, here, but some of them are not at the pro forma level. He talks about don't buy in a bad neighborhood in Dallas, you kind of hear some of the bad stories. But you're just going over there trying to get more knowledge and more experience and more networking and more connections.
Cool. Yeah. Very cool.
So I got to switch topics. I need to know, Mike, why did you place a property in a neighborhood right next to a school where you're filling it with
a detox center?
Drug addicts and pedophiles. Right next to a school.
Straight up. Dude, you sound like the neighbors.
I read this article in the newspaper, and
it
said this guy chose this location right next to a school to place a bunch of pedophiles and drug addicts next to a school. And this is an elementary school nonetheless, correct?
Yeah, and we've talked to the principal, and we've met with the principal, and we're going to do a good neighbor agreement with him. Like, this is not something that's not heard of.
That's not what the newspaper said.
Mike's trying to help. He's trying to help people, not kids.
Yeah.
Just people.
Yeah. So landed on the fucking Coin News, like the fourth time been in the news.
You were on the news?
I wasn't. I feel really bad. I actually sent a voice message to our tenant today. I was just like, started crying on the fucking message.
Oh, because they master leased it from you, right?
Yeah, he's taken all of the fuck. I feel so bad for him. So bad for him. So here's what happened. And I mentioned this where we were 90% of the way of the approvals, and I mentioned this, planning and zoning approved it. They fired the planner.
So this place is still empty?
Yeah.
And are they leasing it from you right now?
We're $2.5 million into it.
Into your care facility.
And we have a triple net lease signed with them.
Are you done renovating it all?
No. Oh. We're at as far as we can get until we get our permit issued and we can call in inspections.
And they're not paying on their lease yet until you.
No, they paid 1 month and given a security deposit.
So was it part of the permitting that led to the neighbors being notified?
Yeah. So when they fired the planner, the senior planner came in and said, we shouldn't have even taken this application in yet. You're supposed to go through a conditional use approval process first.
I thought it was an outright use.
It is, and this is where I scared away attorney by using ChatGPT to sue the city, because it's gray area in code, right? Because this facility it was built before the zoning code even existed. It was in Multnomah County. It was permitted in Multnomah County, not the city of Portland. And so this is the nuance of the code. But yeah, so in mid-July they came, they took that approval away. We were just working on some stupid mechanical things. Structural was approved. It was just HVAC related.
How do they take a permit approval away?
Because it's check sheets, right? So we get a check sheet back and it says, hey, here's the use issue, and then we show them all of the legal non-conforming history, so all the permit records. This building has great permit records, and that's why I felt so confident about it. And so they come back and say, hey, you can't do this, you need to go through this process, and then we give them all the permit records, all the building drawings, and then the planner said, great, you're approved, you do not need to do this. And so we got past that part of the check sheet. Now we were just focusing on some HVAC stuff, some very minor stuff. And we have all the information for those check sheets, and we've submitted everything, but they stopped reviewing because they stopped the permit. They said you have to now get conditional use approval, and then we'll let you continue the permit process.
And that meant mail everyone in the neighborhood.
So and this is a type 2, so that means you have to mail to everyone within 150 feet.
And they vote?
There's a comment period, so you have a 14-day comment period, and then they make a decision, and then either side can appeal the decision. So if they approve it, anyone who commented can appeal it. If they disapprove it, we can appeal it.
Aren't you past that period?
We are now. So here's what happened was they sent out notice, and people, and this is a rough part of town, they've been dealing with the homelessness of Portland. And there is another detox facility not too far away. And this is where being next to the school is actually better for the neighborhood. It sounds really fucking stupid, but this is why. That facility down the road, if those people leave and they're not rehabbed, they just now become vagrants walking up and down the school street. And going back, so one of the questions asked by the home board is, what are you going to do? What is this? How are you going to reimburse us for property values? And so that's the neighbor, actually a person in the neighborhood association said that. Here's why this is better for property values. The neighbor across the street put in a scathing report. So fucking mad. Well, what's her lived experience? Her lived experience was when it was a senior care facility full of mental people with drug problems who were in a cyclone fence, who were talking to the kids through the cyclone fence and coming across the street and knocking on her door, going through the cans, begging for money, right? So the neighborhood experience with this property is it's full of really weird freaking people that are probably pedophiles, that have drug problems, that probably have really bad background checks. That's what they've dealt with. So that's what they believe is happening. Yeah. So going to the news article, the first quote in the news article is someone who volunteers at the school. I have to get a background check just to volunteer at my kid's school. I guarantee that's not what's happening right here. When you do this conditional, all the attachments we have to do in this application shows all the programming, shows the screening they're doing background checks, no pedophiles, no sex offenders, no hardcore criminal history. Like, we have this whole process. We spent $40,000 in security system. It is completely fenced. Once they get in the front door, they cannot get out. There's 20 patients. Sounds like 25 staff, right? So it's a hospital, a securitized hospital. Now we have a nice big wood fence. You can't see they can't talk to the kids.
Which is a major upgrade from what it was before.
Correct. So, but neighbors project what they believe.
Did they interview your tenant in that article?
This is one of the best things that happened. So there's a neighbor behind us. She was really concerned, right? So everyone makes comments, and as the comments were coming in, I was communicating with everyone. I would respond to everything. The neighborhood association person was really mean, and I just, responded in a very professional way. The planner who's reviewing this process was really happy with how we worked with it. One of the comments that came in was the neighbor behind, and she's like, I'm really worried. I've got young kids, this and this. And I just sent her the programming, which she didn't look at, right? And said, no, this is how we're handling it. And her first response was, oh my gosh, I feel so much better. And then she said, and when we bought this property, they told us that this fence was your fence. I saw that you just built this beautiful fence. Would you build one on the back? Absolutely, Christy. We'd be happy to build a fence for you. So fast forward a few days, the comments come harder. They come faster. They come meaner. There's an emergency neighborhood association planned for Tuesday when I was out of town, this past Tuesday. So our tenant and my second in command go to that Zoom meeting, and the person in the neighborhood association we won them over. Like, Billy won them over. Like, no, this is our programming. And Billy is in recovery. Most of these operators are in recovery. It's really here in his partner's like, yeah, I'm in 36 years of recovery. Like, this is their mindset. Once you're in recovery, you are always in recovery. And so this is their mission. This is their legitimate purpose. And when you look at the requirements from the state, very few buildings qualify. Like, this is the building the state wants to be a facility. And that's actually our saving grace. I'll get to that. So it starts getting worse, where now we're at the very end of the comment period. Thursday, the 28th, was the end of the comment period. And the neighborhood association reaches out to Coin News. And then Coin News contacts Billy. He's like, we need an interview within an hour, and we're going to go live with this article.
That's your tenant?
Yeah. Like, we're going to go live with this article, whether you comment or not. So Billy goes out to meet Coin News on site. Coin News is interviewing this person who put together a petition and has hundreds of signatures now to not allow this to happen.
I'm one of them.
Thanks for signing that petition, Trevor. Yeah, I was dumb enough to forward that to you so you could sign it. So as they're interviewing this person who hates us, who's projecting all this bullshit on it, the neighbor from behind us comes through because Billy scheduled a private tour with her. He takes her through while the neighbor's getting interviewed. They come out, and then the news asks her, her opinion. She's like, oh my gosh, I feel so good about this now. Right? So once you know the facts and once you understand the plan and once you meet the people, and when we met with the principal, Billy's like, here's my cell phone. I'm going to be here from 7 a.m. to 7 at night every single day. Like, this is his world, his life.
Yeah.
And here's why I say it's better to be next to the school. They have a ton of staff there. They know how to communicate with people in mental duress. They are qualified and trained. And so when we talk about a good neighbor agreement, that's exactly what we'll cover in the good neighbor agreement. We're going to be a good neighbor and we're going to help protect your kids. Because guess what? You used to have a shitty operator who didn't fucking care and put terrible people in this building that then spilled over into your school. That's not what's happening anymore. And then the spillover from the facility down the road, guess what? We now have someone on that knows how to communicate with those people. And so it got hot and heavy and it's really fucking scary. And I didn't sleep Wednesday night. And what's our saving grace in this scenario, I fully believe the city would have approved it. No matter what, the city would have approved it. The problem is then they get an appeal and we have to go through an appeal hearing and then there's more time for that and an officer. But what actually happened was, so they started this process in like mid-July. We submitted our actual land use, paid our architect another $6,000 to put together the entire plan set and the application package. We submitted that in August, but House Bill 2005 was passed and went into effect July 24th. House Bill 2005, the state is not allowing cities to require conditional use processes for facilities like this. And so as this was boiling up and as we were scheduling the Zoom call and as we're talking to Coin News,
so it's all for nothing.
Yeah. So on Tuesday or Wednesday, the planner says, what type of facility, sends a question, what type of facility are you putting in there? And so then Billy's like, hey, here's our application. This is the exact type of facility. And then we're like, because we didn't know about House Bill 2005. I don't know how we didn't know about it. But we're like, why are they asking this? And then we find out, oh, yeah. And so as this is getting towards the 28th, the planner said, hey, we may have fucked up. We're meeting with the city attorney. We're meeting with city council. And we knew that was going to happen Thursday. And then we did. We got an email Thursday morning that said, yep, we talked to the attorney. We're going to refund your fees. We're going to send notice back out to the neighborhood association. Wow. So they now have to.
That's a sigh of relief.
Sigh of relief, right?
Except now you pissed off all your neighbors for no reason. But
I mean, they're going to be pissed off no matter what. And I think when you go through a process like this, and even my second in command, Eric, who came up through commercial property management, he's always trained, no comment, you don't engage with the media. We're in a whole different world these days. You have to be open, you have to be transparent, you have to communicate. Yeah. And so it actually gave us a platform to really be able to say, this is why we're doing it, this is what the benefits will be. And no one doubts that the community needs the support. You get the NIMBYs and the assholes who just don't fucking care, and they're like, stop dropping this in our neighborhood, like you're never going to change those people. But even the neighborhood association in their letter was like, hey, we want to support this, but we are concerned this is next to the school. Mm-hmm. And so then you get to communicate with them and you get to show them your program and you get to show them how you care for the community. And so I think it actually is better for us in the long run. Billy's getting threats. Like I said, I'm crying right now. I interviewed a bunch of people, a bunch of different operators before going down this process. Because it is important that you get the people that have the right heart. And I sent him a message today. I was just like, dude, I love being in the arena with you. You didn't sign up to be a developer. You have a purpose, you have a passion, and you've been looking for a building like this, and you understand like one of his partners, because they've looked at 100 buildings and they can't get anything approved. And one of his partners who is in construction knows, he's like, yes, this is it. For him to stick through that and go through that, they've lost staff because they were supposed to open. We submitted our application early this year. It was supposed to be a 3-month process. Yeah. It was supposed to be open. And so they're losing staff. They're losing this. He's put his life savings into this. So I'm thankful for him. But dude, it's a fucking process, man.
Well, I mean, he's, like you said, this is his life's work. This is his passion. Like he's not gonna give up.
Not at all. And it's and we're partners. I'm already cold calling. There's a vacant facility not too far down in Gresham. It's perfect. It's almost the same freaking type of building that's been vacant forever.
You gonna do another one?
Yeah.
Is it next to a school also?
No, it's not.
What's the name of his program?
Rose City Detox.
Is it a nonprofit?
Yeah. No. I'm sure it's not a nonprofit.
Okay.
Yeah.
So they don't go out. They don't raise money or do anything like that.
No, it's 3 partners.
So it's a detox facility that screens their people before they come in to detox.
Correct.
Are they typically detoxing from heroin?
Yeah, fentanyl, heroin. I think Billy was into meth. One of the other partners was into heroin.
You don't really you detox from alcohol, heroin, fentanyl. I don't know about meth. Maybe there's a detox.
No, I don't know. I don't know the details of it. As far as what I'm sure all kinds of substance abuse.
I know lots of details about it.
Yeah, I'm sure you do. So yeah, that's where we're at. Now we have to wait. We got to kind of see where we're at with the city. House Bill 2005 requires like a 120-day waiting period, so we don't know if we're in that waiting period or not. Hopefully they backdate that to when our application was, so we're already past it. But yeah, we're hoping we can get our permit issued, and we can, because we're ready to call in inspections. Like, we've done everything up to, like, we have our plumbing permit, we have our electrical permit, we have our HVAC permit. All the roughing has been done. We just can't get it inspected to go to cover because the permit hasn't been issued.
So this is different than a normal real estate deal because you've pre-leased you found the tenant for the project before you bought it, and so he sort of, like you said, he became your partner. Is he actually your partner, or is he just your tenant? You guys just decided to do this together. You'd provide the building, he'd provide the business, and he'd lease it from you.
Yeah, our only partnership documents would be a lease.
Okay.
But
you're in it together.
Exactly, right? And even like one of my friends, I'm getting he's an investor. He's no longer in the area, but he's going to give me a private loan on a project right now, and promissory note and security. And he's like, even with this though, I want the big boy handshake that you're going to do me good. You're going to pay me off if this deal goes bad, right? So you have contractual relationships, then you have a real fucking relationship. So Billy is, he's my partner. We want to go look for more projects for him. Like, this is the model. And if we can prove the model, he wants to open up other ones, we'll go buy the facilities.
It's a really big need. So I'm in the recovery community, and we try to help people get into detox, and it's really hard to find places to get people in. Yeah. There's a couple good spots, but we definitely need more. There's no doubt about it. There's a need for it.
Yeah.
That's cool.
Yeah.
Trevor, look what you started. You got Mike all
fucking crying. Man. That's what I need. He crying a podcast.
I would like to make him cry.
That's what Mike.
I want Mike to make you cry. I want to see the robot.
Well, and I mentioned this. I even met with 2 of my staff members yesterday, and I was like, dude, I've been in depression. I told my staff members that, and that's when you're in the micro Mike world, and you're more in the depressionary side, and you're not thinking abundantly. You're thinking more in the trees. You don't cry. You don't open up. You're not heartfelt.
Bottled up.
You're bottled up. Yeah. So. Yeah, dude, I'm really fucking thankful for where I'm at right now. The struggles over the past few years, but to kind of be at this place of, gratitude again.
Do you feel like your struggles were market imposed or more self-imposed, or both?
Absolutely both.
So like the market turned against you and you turned against yourself at the same time?
It's the longevity of it. When the market first turned, I was great. It was... probably, and that coincided with moving to Salem, right? So I moved in January of 2022. The market changed, mid 2022. Buying my old partner out took a lot out of me. That was a huge fucking relationship for me. I was bankrupt when we started our partnership. And then when you're buying someone out and you're trying to go down this process and you own a shit ton of assets and none of them are done, you're trying to make projections. And that's really what ultimately I came to him like, look, dude, this sucks. We are fucked unless we work really, really hard. And all those projections, none of them fucking came true. And so I bought him out with all these projections that have not come true because the market's been worse and fucking worse. Yeah. That's all on my shoulders.
Yeah, the trailing data ended up not being forward guidance.
Yeah, exactly. And so that just wears on you over a long ass period of time. you know. And when I moved to Salem, I lost the proximity to the gym and good food, and my health has just gone down. I stopped working out, and, you know, I just lost the behaviors and habits who made me who I was slowly dissipated and got worse and worse as the market got worse and worse and the struggles got worse and worse.
Well, look at Trevor. He's got 10% body fat. He eats a pound of meat before every episode. Like, you can live in Salem and still be healthy if you want to be like.
Oh yeah, absolutely. But that's not the mindset I was in, right? Starts with a decision. It does start with a decision. Absolutely. And my decision was, well, it's a lot easier to go golf.
Well, sometimes you just have to wait till you're uncomfortable enough to make that decision.
Well, that's usually what it is, right? You hit rock bottom before you go up.
Yeah.
And not that I hit rock bottom, but you know, I was the shell of my former self, which was better than the shell I was in 2018. You know, when I signed up for GoBundance, why was I 285 pounds? So I was fucking depressed. I was separated. I saw my kids on the weekends. I had to drive an hour on a Friday and drive an hour on a Sunday just so I could see my kids. You know, I was living in a fucking basement apartment in 2017 when we first separated. You know, it's like, it's you go through these phases in life, and you need to think bigger, and you need to have hope, and you need to have a purpose, and you need to have big thinkers around you, and you need to have a support network. And when you become micro, you go into phases like that, you bottle up, right? You choose to not engage in what you should engage in, to do what you should do. Mm-hmm. And even though you know it, as you're going through it, and I'm reading a really good book right now, like on motivation and all the psychology and the chemicals we have in our bodies. And yeah, dude, it was just, I was in that chemical train that put me down a different road that I couldn't get out of. And, you know, I'd have my fits and my starts, and, you know, like, you guys have fucking witnessed it. Like, how many times is Dane like, hey, are you okay? I get a text from Dane. How you doing, man? Are you okay? You know, you guys fucking sat me down for an intervention last summer after I started taking Adderall.
They detoxed you on Adderall.
They did detox me off Adderall.
Wow. Yeah. All right. That's some deep stuff, man. It's good stuff, though. I like it.
I mean, that's why we do it. We don't do it for the money. I mean, we do it for the money. We do it for the lifestyle. We do it for the impact. The money's a requisite of all of that stuff.
It's a byproduct.
And it's a requisite.
Yeah.
Yeah.
Trevor, you're awfully quiet.
He doesn't like seeing grown men cry.
This is human being stuff, not robot stuff. He's trying to process it all right now.
I bet $10,000 Trevor will never cry like this in a podcast.
Oh, episode. We'll get him to cry.
You think so?
Days, yeah.
If you punch me in the face hard enough.
I'm gonna punch you right now.
You can't punch me hard enough for sure, dude. You're old.
But Utah was crazy because they're having these like thunderstorms. I couldn't sleep at night. I'd wake up freezing cold, or I'd wake up fucking sweating. And then all of this, dude, I couldn't sleep at all. I would leave at like 8 p.m., which was 7 o'clock our time. Like, kind of the events are over and people are networking. I'm like, I'm going to bed.
Do you know what you could do to numb all that? Heroin.
You remember the first time we ever met, Mike, and we sat down and Trevor and Dane asked me, like, how do you know when you've gone too far? And I said, if I'm not sleeping at night,
yep,
I've pushed it too far.
Yeah.
And you were like, oh, that's a good way to gauge it. Sleep is so important. It is so important. If you're losing sleep over anything, I promise you it's not worth it. Doesn't matter.
Yeah. And I had a bad dream about this facility before we submitted the permit application. And I learned a lot of lessons. I would have done it differently. I would have structured the deal differently. I would have done a delayed close. I would have got approval before we bought it. We were just rushed because of the seller, and, you know, it was subordinate financing. It was easy to get into, and I met with the city, I met with structural, I met with planning and zoning. Like, I felt very confident that we wouldn't have to go down this conditional use world, even though we did.
We learned this saying from Robert Harden, who I think he stole it from the new F1 movie that Brad Pitt's in. It says that slow is smooth and smooth is fast.
Yeah.
In every deal you're in, the seller and the brokers are always going to be trying to rush you to the finish line. And if you can just slow it down a little bit,
yeah,
and make sure you're covering all your bases,
yeah,
you'd never want to rush into something, because that window of, I've got 30 or 60 days to close a deal, and then it takes you 10 years to get out of that deal if it's the wrong deal.
Dude, one of the worst parts was, when we were 90% of the way through, I was talking to some of the capital partners, because we were delivering K1s and all that stuff, and I'm like, dude, we're ahead of schedule. This is good. We're really excited. And then 2 fucking weeks later, it's like, God, now I got to call them back and say, well, it's a good thing I projected a different timeline because it looks like we're on this other timeline now.
All right. We going to wrap it up?
Yep, we got to go.
All right, Deal Junkies, thanks for listening. We hope you're enjoying this podcast. Please share us, and we will see you next time.